Let's get started with Altcoin. This stands for alternative coin. Bitcoin is known as the first and foremost cryptocurrency, the coin father. So any cryptocurrency that's not Bitcoin is an altcoin. Arbitrage, the practice of buying and selling the same coins on different exchanges at the same time to take advantage of price differences. You can do this on betting sites as well to maximize your returns, but I think it may be illegal. Angel investor, wealthy people who contribute significant funds, usually over $1 million, to emerging projects. Address, a unique alphanumeric identifier used as a destination for transferring crypto. ATH stands for all-time high, the highest price a cryptocurrency has ever reached. This is also applied for things like stocks and other investments. The alternative is ATL, all-time low, the lowest price a cryptocurrency has ever reached. Block reward, the payment given to a miner for securing a blockchain that uses POW, proof of work consensus. Block height, the total number of blocks on the blockchain since the Genesis block, which is the first block, was first mined. Bullish, just optimistic about the future of cryptocurrency's price. Again, this term applies across the board in most assets, including stocks. BTC, that's Bitcoin's ticker symbol. Batched transaction, a transaction that combines multiple transactions into one for increased efficiency and decreased fees. Block size, the amount of data that can be stored in one block of a given blockchain. For example, the block size limit of Bitcoin is 1 megabyte. Larger block size allows for more transactions per block. Therefore, it's not the transactions that are faster or slower, it's the transactions may be seemingly faster because the network is holding more transactions at one time. Bitcoin network, the first blockchain-based peer-to-peer protocol that allows its users to store and transfer wealth. Blockchain 2.0, a term used to describe cryptocurrency projects that facilitate programmable transactions rather than simply acting as a method to store and transfer value. Projects like Ethereum are known as Blockchain 2.0 contracts because they allow their users to create and execute smart contracts and develop decentralized apps. Bag holder, an investor who bought crypto or cryptos believing that it would appreciate in value. Instead, the crypto decreased in value and they're still holding it, and it's referred to as holding the bag. Bear trap, a short-term drop in cryptocurrency's price that makes investors think the price will continue falling. Instead, the price rises significantly following the drop, fooling the bears. Following on from that, we've got bearish, which is pessimistic about the future of cryptocurrency's price. Again, bearish applies across the board to things like stocks as well. Bankroll, the amount of money you've got available to you to invest. Bitcoin Cash, the first successful hard fork of Bitcoin that allows the protocol to grow and scale by removing its block size limit. Bollinger Bands, a tool used to identify moments when assets prices are relatively high or relatively low to inform trading decisions. Blockchain bloat, a condition that affects cryptocurrencies when the data stored reaches very large sizes due to increasing numbers of users and transactions. When blockchain bloat gets severe, transaction speeds suffer. Bitcoiner, someone who uses Bitcoin regularly or is heavily involved in its technology. Burn, a mechanism that destroys an amount of coins or tokens, thereby decreasing the total coin supply of a cryptocurrency and hopefully driving the price up. Backtest. Backtesting is the method of running your trading strategy on historical data to find out how well it would have performed. Bull trap. We already talked about bear trap. This is the opposite. A short-term rise in the cryptocurrency's price that makes investors think the price will continue to rise. Instead, the price falls significantly following the rise, fueling the bulls. A block. A segment of data recorded on the blockchain that can contain transactions and other information. Cold storage. In the cryptocurrency world, this term refers to storing your cryptocurrency in a location that's offline and therefore inaccessible to anyone on the internet. Think of a USB. Continuing on from that, we've got cold wallet, an offline wallet for holding cryptocurrency, considered more secure than hot wallets. Central ledger, an irreversible list of all transactions that have ever occurred on a platform. Circulating supply, the volume of coins being held and spent at a given time for a given crypto. Distributed ledger, a list of transactions that exist on every computer that elects to run blockchain software. Delegated proof of stake, a consensus mechanism that has a blockchain's nodes vote for the correct version of the blockchain. Desktop wallet, software that allows you the ability to store crypto on your personal computer. A dust transaction. Transfers of value that are too small to be sent due to the proportionately high fee incurred. It's not worth sending. Digital signature. A unique encrypted output that can't be duplicated. Useful for creating digital identities and confirming authenticity. Days destroyed. A metric for measuring Bitcoin inactivity. Each day a Bitcoin remains unspent is another day added to its total number of days destroyed. dApps, distributed apps, applications without centralized control. Deep web, parts of the internet that aren't accessible through normal means like search engines. Ddos attack, distributed denial of service attack, a means by which a malicious person shuts down another person's internet connection by overloading it with requests. DEX, a decentralized exchange, a platform which isn't controlled by any single authority that allows users to buy and sell crypto. Digital asset, any non physical object of value like a document, an audio file, or a logo that can be owned and controlled. Dump, the act of selling cryptocurrency. You've probably heard of pump and dump. DPoS, delegated proof of stake, a consensus mechanism that has a blockchain's nodes vote on the correct version of the blockchain. Digital identity, a set of data used to represent an entity on the network or on the internet. Double spend, a famous problem that occurs when cryptocurrency is spent more than once. Miners and transaction finality ensure that double spending cannot occur. Encryption, transferring data into an unrecognizable code that can only be decoded with the exact decryption key. Ether, or ETH, the native tokens of the Ethereum platform, required in order to send transactions or execute smart contracts. ETF, exchange traded funds, a group of assets that can be bought or sold as a single asset. There's now coming about cryptocurrency ETFs, but they've traditionally been for stocks. A faucet, a website that sends users small amounts of crypto intermittently and makes money by advertising other services. Fiat, this is normal money, paper money issued by government as default currency. The US dollar, Japanese yen, and Australian dollar are all fiat currencies. Fintech, financial technology, is used to describe new technologies that seek to improve the use and delivery of financial services. Frictionless, a term used to describe the way that cryptocurrencies remove many of the inefficiencies and hassles inherent in alternative methods of transferring payment. FOMO, fear of missing out. Investors with FOMO buy cryptocurrency emotionally rather than logically for fear of missing out on the profits. FUD, fear, uncertainty, and doubt. The emotion rather than logical belief that cryptocurrency prices will fall. Fundamental analysis, the analysis of the economic and political factors that affect the intrinsic value of an asset. This is a bit harder to do with cryptocurrency, easier to do with stocks. DeFi. DeFi stands for decentralized finance. DeFi is a new financial system based on the use of decentralized blockchains and smart contracts to create new types of financial products. Gas, a fee which must be paid to execute network transactions. Genesis block, the first block mined on a blockchain. Hash, output emitted from the algorithm for maintaining consensus on a blockchain. Hash rate, the number of hashes a miner performs over a given period of time. Hot wallet, we talked about cold wallets before. Hot wallet is an online wallet for storing crypto, considered less secure than cold wallets. Hodler, someone that doesn't sell but holds onto their coins. HODL was originally a typo, but it gained the status of a funny backronym, hold on for dear life. Halving, the process of intermittently decreasing block rewards given to cryptocurrency miners by 50%. Hedging, the act of protecting an asset from risk. A hedge can protect against losses or even offset against gains. IPO and ICO. IPO is an initial public offering, an event that a company goes public, selling early shares of their business in exchanges for funds. An ICO is the same, but it's an initial coin offering, an event in which a cryptocurrency project goes public and sells its coins. Incoming connection, a request for communication from one node to another node. IP address, Internet Protocol address, a series of numbers and periods used to identify computers communicating through a network. Limit order, this is something that applies to trading pretty much anything, not just crypto. A limit order is the order where the price is determined by you, the trader. The trade is only executed if the market price reaches your limit price or better. Liquidity, It's way more complicated than this, but the measure of how quickly an asset can be exchanged for usable currency. Traditionally speaking, cash is the most liquid asset. Litecoin, a cryptocurrency that was forked from Bitcoin, known mostly for its decreased block time, which theoretically allows for faster transactions. Lambo, or When Lambo, a cryptocurrency meme, short for Lamborghini. When investors' coins prices go to the moon, they can buy Lambos. Market cap, the total value of the cryptocurrency, calculated by multiplying a coin's price by its total supply. Mining algorithm, mathematical problem that is solved by participants of the blockchain to verify transactions in exchange for block rewards. Minting, the process by which users on a proof of stake blockchain verify transactions and receive new coins for their participation. You could do this by staking. Multi-layer, when a blockchain features several levels for scalability and encryption purposes, it can be said to be multi-layered. Moon, a cryptocurrency meme again that refers to skyrocketing of a coin's price. It's going to the moon. When hodlers' coins go to the moon, they can buy their Lambo. Miner, a person that volunteers computing power to verify transactions on the blockchain in exchange for block rewards. Mining, the process by which new coins are created as transactions on the network are verified by the miner. Market order, again, this one doesn't just apply to crypto. It's a pre-planned trade set to execute if a crypto reaches a certain price. Node, a computer that runs a cryptocurrency software and validates transactions. Output, a grouping of addresses that receive coins in a cryptocurrency transaction. An OTC exchange, this is essentially what it was meant to be at the beginning, over-the-counter exchange, also known as off-exchange trading, trades that occur between two parties rather than using a centralized exchange. Orphan, a block that's no longer a part of the original blockchain because it was not verified by the majority of miners. Peer, if you're running a full node, a peer is someone else also running a full node. Provably fair, outputs of an algorithm that can be examined and verified. This term is commonly used in cryptocurrency gambling. Proof of stake. I've already brought this up in different contexts, but it's a method of minting new coins and securing a platform by allowing users to stake their coins and receive more coins as a reward, introduced as an energy efficient alternative to POW or proof of work. Permissionless refers to public blockchains like Bitcoin. Anyone can generate an address and transact BTC. Private key. Private keys are used to spend cryptocurrency. Parent chain. A cryptocurrency's main blockchain which connects its side chains to its subchains. Privacy coin. Any crypto that focuses on maintaining private transactions between users. Examples are Dash, Zcash, and Monero. Proof of work. The consensus algorithm introduced by Bitcoin. POW requires miners to compete against each other to add new blocks and earn rewards. Proof of existence, the process of storing information that can't be changed or deleted. Public key, this is the address that you share with others to receive crypto. Pump, before I talked about dump and I referred to pump and dump, the rapid rise in a cryptocurrency's price. P2P is peer-to-peer, refers to networks in which individuals connect to each other rather than a centralized authority. And here's pump and dump. This occurs when cryptocurrency's price shoots up, then quickly crashes. Pump and dumps are often coordinated manipulations of the market by groups of people for profit. Roadmap, a plan that sets goals and deadlines for a project's future development. Ripple, this is a platform that connects banks, payment providers, and digital asset exchanges to provide frictionless transactions. Staker, you can volunteer to lock away some of your coins or tokens to verify transactions on a proof of stake blockchain in exchange for staking rewards. You can do this with Cardano. Scalability, a measure of how easily a cryptocurrency will be able to handle more users and increase transactions. Shitcoin, a derogatory term used to describe altcoins that are based on a faulty technology or have little promise for the future, not a good investment. A stale block, a block that's been worked on by a miner but is not included in the blockchain because another miner successfully completes another block first. Signature, a mathematical mechanism for combining a public address with a private address to ensure authenticity and prevent forging. Seed, a type of password that an individual can use to recover their wallet. Sidechain, a platform that functions alongside an existing blockchain protocol, allowing transactions to occur off the main blockchain Sidechains can be customized to allow features like faster transaction time and increased anonymity. Stablecoin, any cryptocurrency pegged to a stable asset for the purpose of reducing price volatility. Satoshi Nakamoto, the anonymous person or group that created Bitcoin. I went over stakers, but let's go over staking. The act of locking up your coins or tokens to help verify transactions for cryptocurrencies on a proof of stake consensus mechanism. Stakers earn staking rewards for providing this service. Scam coin, an altcoin that is marketed as technology with potential, but really just sold to make money with no promise of future. SHA-256, secure hash algorithm 256, an algorithm used by some proof of work consensus mechanisms like Bitcoin. Stop order. A stop order or stop loss order is an order to buy or sell a stock or crypto once the price of the stock reaches a specific price, known as the stop price. Signaling, an indication of support for a feature often sent out by miners to inform the general public of their opinion. Smart contracts, agreements between two parties that self-execute when their terms are met and automatically cancel when their terms aren't met. Small blocker, someone who believes that the blocks in Bitcoin should be kept small so that anyone can run a full node. Soft cap, the minimum amount of funds that a crypto founder wishes to raise in an ICO. If an ICO doesn't meet its soft cap, it will often be cancelled until a later date. Again, ICO means an initial coin offering. Tangle is a consensus method that allows users to transact anonymously and requires relatively little electricity. It's an alternative to proof of work and proof of stake. TPS, transactions per second, a measure which describes how fast a crypto can handle its users' transactions. Trading bot, software programmed to buy, sell, short, long, and execute other trading strategies and commands when the owner is absent, trading while asleep or away from the keyboard. Token, a cryptocurrency created in another platform like Ethereum. Tokens operate by using the technology of the platform on which they were created. Timestamp, a sequence of numbers used to identify the moment in time the transaction occurred. This isn't unique to cryptocurrency. TX is just transaction. Total coin supply, a measure that describes how many coins of a given crypto can exist after all mining is completed, if that's possible. Transaction fee, pretty self-explanatory, the amount of value that you have to pay to transfer value on a blockchain. UIA is user-issued assets, tokens that can be created on BitShares network. Taint, a measure that describes the strength of association between an address and earlier transaction addresses. Unbanked, these people are taking advantage of crypto in full. It's somebody without an account at a bank or another financial institution. Utility token, a unit of currency consumed in a process. For example, an arcade token that gets used when a game is played, or a coin like BNB, Binance token, which is used to pay exchange fees. Volatility, a measure that describes how rapidly an asset tends to fluctuate in price. Crypto in general is pretty volatile compared to some other assets. Venture capitalist, an individual that invests in emerging projects with the hopes of earning a large return on their investment when the project succeeds. Vanity address, addresses that hold cryptocurrency. Instead of random alphanumeric strings, however, users with vanity addresses can choose specific words and phrases for their addresses, similar to vanity license plates. Virgin coins, coins that haven't ever been spent. Virgin coins were mined and then left alone. Whale, a very wealthy person capable of making large trades and usually makes a big difference when they make a big trade in the market. White paper, a technical document that outlines a project's features, technology, and vision. I've already gone over a few different types of wallet, but a wallet is software or the device that contains public and private keys for storing your crypto. Zero coin, a crypto that uses the Bitcoin protocol but offers increased anonymity in transactions. 51% attack, a hypothetical attack in which a malicious person gains control of more than half of crypto's hashing power and is then able to rewrite old blocks, allowing double spend. Z-score formula, a formula that uses data to predict how financially secure businesses are. This is a little bit more related to stocks. Zero confirmation transaction, payment that has been broadcast but is still pending inclusion on the blockchain. Whitelist, relating to ICOs or initial coin offerings. A list of registered and approved participants in the ICO. Whitelists are used to exclude non-accredited investors in order to better comply with regulations.